Welcome back. You're watching Bazaar Morning Call. It's time now to tell you the stocks that you need to have on your radar. This Tuesday morning, our entire research team is standing by with CNBC TV18's list of top stocks for the day. Good morning, everyone. Gaurav, again, another busy day for you. Lots of quarterly updates coming through from the banks.
Well, yes. If you look at banking updates, first let's talk about Kotak Mahindra Bank because the growth has been phenomenal once again. The growth has been at around 16% on a year-on-year basis. Remember, this was the number in the last quarter as well. And when it comes to deposit, there also we saw a growth of around 14.6%. Now, CASA growth, that remained flat. Remember, last quarter was the quarter when we saw CASA growing at 7% on a sequential basis. But in this quarter specifically, on a sequential basis at least, CASA growth has remained flat. But at the same time, what we should watch out for is that the segments which are actually leading this growth, and second is that the NIMs for the quarter. Now we will get only during the quarterly results, but for now good set of numbers in terms of pre-quarterly updates from bank. Apart from that, Axis Bank, now this bank came up with the quarterly updates, and if you look at the growth, loan book growth is at around 14%. Now for Axis this is very important, and the reason being that if you look at the trajectory of Axis, for the last few quarters, we have seen Axis Bank actually struggling with the growth. Last quarter, we saw Axis Bank actually got into double-digit loan book growth, and the 14% growth trajectory is something that we had seen back in first quarter of FY25 and days before that. So this is actually the first time when Axis Bank is reporting 14% plus growth after first quarter of FY25. Other than that, deposit growth, that also remained healthy at 15%. Another thing to highlight is that throughout this pre-quarterly updates, we have seen actually banks' advances growth was higher than the deposits growth for most of the banks. But for Axis Bank, deposit growth is higher than the advances growth. So that is also something that we should highlight. So these were some of the bank updates. And on the back of that, Axis Bank also is likely to open in green today.
Okay. All right, Gaurav, thanks a lot for that. But you've got a few more updates, I believe, that you're tracking today. IndusInd Bank and L&T Finance as well.
Well, yes, if you look at IndusInd Bank, we are seeing some kind of decline in the loan book growth. Actually, the loan book declined almost by 13% on a year-on-year basis, and this, in fact, this also reflects into 2% decline on the sequential basis. When it comes to deposits, deposits also degrew almost by 4% on a year-on-year basis. So basically, we saw actually the balance sheet shrinking on a year-on-year basis for IndusInd Bank. So that is something which is negative for the bank, given that we are, or rather, all the investors are expecting some kind of pushback and banks' asset and advances to go up. But it seems that third quarter at least is not that quarter where will we see the growth, at least in terms of advances. Apart from that, L&T Finance. Now, if you look at the quarterly updates, they look very much strong for the company, and the reason being that retail loan disbursement, now that has increased almost by 40% on a year-on-year basis, and also this reflects 20% growth sequentially. When it comes to retail loan book, that increased almost by 21%. Remember, actually, company has given a target of more than 25% growth in FY26. Last quarter, if we see the growth, it was at 18%. This quarter, it is at 21%, and the street is expecting around 20% growth. So definitely, it is higher than the street's expectation. Specifically, if you look at gold segment, now that is also growing because gold loan disbursements, they came in at around 1400 crores versus what it was at 983 crores. Remember, this was a business that they had acquired in fourth quarter of FY25, and this is also showing some kind of growth. So all in all, a very good set of numbers from L&T Finance in this quarter.
Thank you very much for that. So three positives: Kotak, Axis and L&T Finance. IndusInd Bank, though, has had a soft quarter. Vivek is now joining in with more on Adani Ports and IEX.
Well, that's right. December monthly update as well as a Q3 update coming in for both Adani Ports as well as IEX. Adani Ports, December 2025, the cargo handled by the company went up almost 9% on a year-on-year basis at 41.9 billion metric tons. December 2025, the container volumes actually aided the growth, up almost 18%, and the logistics volumes was largely flat. Now, talking about YTD FY26, the company has handled close to 367.3 million metric tons of total cargo, implying 11% year-on-year growth when you're comparing the 9 months of FY26 to last year. Just an alert, this is compares against the guidance that the company has given for FY26 cargo volume growth that is expected to be in the range of 545 to 555 million metric tons, which includes the NQXT Australia acquisition as well. Now coming to IEX, remember, apart from the operational update, today is an important day given the fact that at Aptil today there will be another hearing regarding the market coupling case, and any development there will be material as far as IEX is concerned. Now, talking about the Q3 FY26 update, almost 34.8 billion units of electricity was traded. Volume actually saw 11.9% year-on-year growth. But this is despite the fact that the day-ahead market, one of the key markets for IEX, actually degrew 2.8% for this particular quarter. For the month of December, total volumes went up 2.8%, but the DAM segment volumes fell 11.6%. Internal slightly soft, but this could be overshadowed by the news that could come out of Aptil today.
And we'll talk more about the news, that Aptil thing, which is coming up today in a little bit from now. Thanks very much, Vivek, for that. Tata Motors passenger vehicle is the next one we have on our radar. Sur is here with details. Good morning.
Morning, Prashant. So Tata Motors passenger vehicle has given the update for JLR, and this is for Q3 of FY26. And as expected, it's a weak update as far as the volume is concerned. If you talk about the wholesales, there the drop is more than 46%. If you talk about retail, there is a drop of almost 25%. And for whole year, that is 2025, wholesale volumes have fallen by more than 26%. And the drop is seen across the markets. And major two reasons why there is a big drop. First, there was a production stoppage because of cyber incidents that company had reported in September of 2025, and after that production got to normalcy only by mid of November. And the second, the planned wind down of legacy Jaguar, that is also impacting the total volumes. As far as the major contribution is concerned, it came from three major models, and those are Range Rover Sport and Defender, and these three together have contributed more than 75% to total wholesale volumes, and that is up almost 400 basis points year-on-year and down 240 basis points on a sequential basis. I'm going with mild red because of the recent underperformance on the stock, and also there is an improvement as far as the India passenger vehicle business is concerned.
Okay, all right. Thanks a lot for that, sir. Hopping across to Mangalam, he's here to tell us about Trent. Mangalam?
Well, I'm going with mild red on Trent this time around as well, because now the street seems to be, adjusting itself to a lower growth scenario for Trent. They've given their third quarter update where the revenue has grown 17%, 16.9% to be precise, close to around 5,200 crores. And remember, this is a number that they've netted off GST, because had it been for the GST cuts, then the realizations would have been lower, similar to something that we saw in the case of Avenue Supermarts yesterday. But similar to, again, what we saw in Avenue Supermarts, the store addition was a positive. So they've opened 17 Westside stores and 48 Zudio stores during the quarter. And if you equate the number of stores that they've opened between last year and now, it so appears that maybe the revenue growth is led entirely by stores, and there is a decline in same-store sales growth, and at the same time there is a decline in sales per square foot also. And this trend has been on the declining side. You look at the first quarter where the revenues grew 19%, second and third quarter the revenues growing 17%. No meaningful pickup in growth out here. This despite the management saying that on a long-term basis, they are looking at between 20 to 25% CAGR. And the last three quarters, these numbers have actually disappointed what the management had guided for as well. The only reason I'm going with mild red and not a bigger red is because the stock has been an underperformer in all of 2025. After doubling in 2024, it's fallen about 40%. So a bit of the slowdown is in the price, but how much, we don't know. As of now, going with mild red.
Okay, all right, Mangalam, thanks a lot for that. Well, I'm looking at SAIL, and the stock has done very, very well of late. Yesterday as well, it ended at the high point of the day. They put out their update for the month of December, and it looks quite good. They say that the sales volume number is up by close to around 37% on a year-on-year basis for December, and they've recorded the highest ever December sales. They go on to point out that they've seen a surge across various categories. Focusing on April to December, the sales number that they've disclosed is up close to around 17% on a year-on-year basis. The management also adds that export volumes also recorded significant growth. We'll have to get the kind of contribution that's coming out there, smaller part of their business, but growth. So going with a tinge of green on this particular one as well. Going back to Mangalam. Mangalam, what about Dabur?
Well, Dabur is mild green. The reason why I say that is because, consolidated revenue growth is picking up, seen in mid-single digits. The EBITDA and net profit continue to grow ahead of estimates. The stock ended at the low point yesterday. So, the street was anticipating mid-single digit sort of revenue growth. But EBITDA and profits growing ahead of that is a positive, which means there is margin expansion. Consumer sentiment, the company said, improved in urban and rural areas. Rural still outperformed urban, which is better for Dabur because they have a higher share of revenue coming in from rural than all the other FMCG players. Home and personal care business, that grew in double digits. That's a positive. Healthcare, low single-digit growth, but that's a sequential improvement. The only reason why the business was impacted was because of the beverages portfolio. which got impacted understandably by adverse weather. So to that extent, I'll also look at Varun Beverages this time around because their portfolio could also be impacted by heavier than expected winter. But for Dabur, it is a positive. A mild green is what I expect on the stock today.
Thank you very much for that. Let's quickly recap then of the top stocks then. Stocks with positive news flow are the banks, the big large banks, Kotak Mahindra Bank, Axis Bank, L&T Finance, Adani Ports, IEX, Dabur and SAIL. Stocks with negative news flow are Trent, where Mangalam says it's going to be a mild red, Innocent Bank and Tata Motors. Well, moving on to the other important story that we'd like to highlight, Reliance Industries has clarified and denied the Bloomberg report, which claims the 3 vessels laden with Russian oil heading for Jamnagar refinery. The company's statement reads, and I quote, "A news report in Bloomberg claiming the 3 vessels laden with Russian oil are heading for Reliance Industries' Jamnagar refinery is blatantly untrue. Reliance Industries Jamnagar refinery has not received any cargo of Russian oil at its refinery in the past 3 weeks approximately and is not expecting any Russian crude oil deliveries in the month of January." The company goes on to say, "We are deeply pained that those claiming to be at the forefront of fair journalism chose to ignore the denial by Reliance of buying any Russian oil to be delivered in January and published a wrong report tarnishing the image of the company." End of quote. Well, let's move on then.
Just a quick word, Rima. It's an important clarification. I mean, because it's not just about Reliance, right? I mean, it's essentially about tariffs and all
Flouting
of that,
it,
flouting it, etc. So, strong denial, and we don't usually see this kind of thing coming through. But I think perhaps the company felt it needed to be said and loudly for everyone's consumption. So, it's a very, very closely watched thing. The amount of, we had HPCL, for example, yesterday with us, and we asked them how much of what's the mix of oil, etc. It's come down very, very dramatically. So this report certainly, going against that, and that strong sort of denial and clarification from Reliance Industries. Well, Manisha is here with a quick roundup of all that is happening in commodities, and a lot is base metals, precious metals. Manisha, what's top of the list? Hard to pick.
Oh, thank you for that. Well, it's not too much of a movement that we've seen in the crude oil prices, but it is metals, the tangible commodities, which really seem to be doing quite well as January has begun. So copper, I want to start with that one, has hit a record highs. There are concerns of potential U.S. tariffs, but for copper, it also is about strike at Chile's mine, which is adding premium to prices. Not just copper, you have aluminum trading at a 3-year highs. You have nickel prices trading at a 1-year highs. Iron ore, which closed 2025 on a negative note, has started 2026 on a very positive footing there. And then you have zinc prices trading at a 14-month high. Silver continues to shine bright. We saw 150% of gains in the previous year, and silver has gained 10% already in 2026. The overnight gains for silver have been to the tune of 5.5% there. So very strong gains continuing into the market there. A final word on the crude oil prices, which is quite volatile. The investors still are assessing impact of U.S. action towards Venezuela, but it really is about surplus of 2.5 million barrels that we are dealing with in this year. And then Saudi Arabia cutting selling prices for its Asian consumers for a 3rd straight month tells you that the demand is not so strong and the prices are taking pressure because of that.
All right, Manisha, thank you very much for that. More later. We take a break. We are back and we connect with Mayuresh Joshi, Director of Research at Mark Smith India, for some specific stock conversation. Lots of business updates to discuss as well. Stay tuned.